Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. We have an amazing guest for you today, Raphael Collazo, commercial real estate agent at the Grisanti Group. Welcome to the show, Raphael.
Thanks, man. I appreciate it. Coming to you. I mean, I'm from Louisville. I'm happy to be here and excited to be on the show. I've watched several of your guys' episodes, so it's really, really good job what you guys are doing. So,
I greatly appreciate that. And a lot of questions I wanted to ask you today, starting with Louisville. That's a market that I'm interested in. Tell us about Louisville and some of the great things going on out there.
yeah, no, Louisville's a great area. And just to give you a backdrop of myself, I moved here about in late 2017, early 2018. Before I got into commercial real estate, I was a software implementation consultant, and I used to work on a big project in Puerto Rico. And when Hurricane Maria hit, I got moved here on a project for the city from a tax software perspective. And it was supposed to be temporary and ended up kind of branching out longer. And then I got into commercial real estate thereafter. I mean, Louisville's a great little town. I really enjoy it. One of the cool things about Louisville is it's a small, big city. I mean, we're one of the top 50 metro areas in the country, yet it still has that small town community feel. It's very, in my opinion, I think it's a little bit easier to get your name known in the area because of the fact that, it is one of those tight knit communities. So once you start getting in with those different groups, you can, kind of make a name for yourself pretty quickly. As far as, things about Louisville, I mean, we're obviously very famous for the Derby. There's a lot of, tourism pertaining to the bourbon industry. So there's a very heavy centric focus on hotels and tourism, but we also have a lot of logistics and transportation companies locally. Probably the biggest company local is Humana. It's one of the biggest insurance companies in the world, was founded here. KFC Yum brands are from here as well. We have a lot of medical uses. So hospitals, different things like that. The University of Louisville drives a lot of research as well. So it's a very diverse industry, a lot of industrial presence. We're very central when it comes to transportation. I think you can access about 58% of the population in 24 hours driving. So it's very much a hub. We have UPS has a partial headquarters here. So does FedEx. So we do have, pretty good industrial backbone as well. So there's a little bit of everything for everyone. I've really enjoyed it thus far. And yeah.
Yeah, amazing. You got the Bourbon Trail. And I know my favorite bourbon has got a racehorse on top of it, straight from Churchill Downs. Nice. So a lot of great things going on in Louisville. Yeah, really a fun town. You come to us from the software industry. Maybe you could tell us about some of the lessons learned there and how that's translated into real estate.
Sure. Yeah, no, I think, I mean, I wouldn't trade my experience in the software business for anything in the world. And I actually didn't study, software development or computer science in college. I was an industrial engineer and minored in economics. And then after college, I got the opportunity to, interview for different consulting roles. And I found that this particular company that I've ultimately joined, and I kind of self-taught myself VB.net, and which is what they utilized a lot of, I guess, the government software systems, especially back in the day. They implemented, they utilized that software, and so, or that coding language, I should say. And so our company utilized that. And then I also taught myself SQL. And so then, got into the business, and I got the opportunity to work on big software projects in Washington, D.C. and then Puerto Rico. And so from a traveling perspective and working in these different environments, it taught me about, adaptability, being able to, consult people who are, oftentimes a lot older than you. And they're very skeptical about what you are providing because they've been utilizing a system for many, many years. And, they've found a way to be able to navigate that system. And now you're coming in and trying to change everything when a lot of these individuals have been there for 20 plus years. They're getting close to retirement. They don't want to have to deal with, the change management piece. And so that's always a lot of lessons I learned through that. And then just how to approach a problem. Again, as engineers, you're kind of taught to break things down into its component parts and then work your way up from there. And so, again, the collaboration piece of being in the software environment is very much so. I mean, you're in the software business, you understand. I mean, when you get in a room with someone and you kind of work through solutions and say, okay, how does this work? kind of mess around with it, implement a scenario and see if it works. If it doesn't work, then try something new and just keep going. And don't ever take no, essentially, or an obstacle. Don't let it stop you, essentially. So that's, those are some of the lessons I learned from my experiences in the software business.
Yeah, I absolutely love that. Never taking no or an obstacle as the final word. Love it. Beautiful lesson to have learned. And then from there, you moved into real estate, and at your boutique firm that you had the opportunity to look at a lot of different types of commercial real estate. So why don't you tell us some of your experiences?
Yeah, sure. So I joined in the brokerage business back in July of 2019. Again, transitioned away from the software side and got into the brokerage side. Again, in the brokerage business, it's very much a, ramp up period. So that first year was very difficult. And, as you're going through the process of building up your book of business, all of a sudden now COVID hits, like March 2020. So, I felt like I was starting to build some momentum, and then COVID hit, at that moment in time. And so you had to kind of rethink about how you're going to, generate business when it comes to your brokerage business. And so I really took, a commitment to really hit digital marketing super hard. And so that's what ended up, kind of building this momentum that I'm now finding myself in, is that I really doubled down on providing digital content, both on YouTube, LinkedIn. We have a podcast now that we've done, and, writing books and offering up in a digital format. And so over the course of my, young career, I've worked on, shopping center deals, 2020, let's say from 3,000 to my biggest shopping center deal was like 26,000 square feet, 12 tenants or 11 tenants, mostly storefront. In the back, there was like a pediatric clinic. I've represented people in the acquisition of office property as well, office buildings, office condos, et cetera. And then I've done multifamily as well, like 4plexes, 8plexes, 5plexes, et cetera. And yeah, it's been a unique experience. And I've learned a ton just in my 2.5 years in the business.
And then multifamily was your entree into the investing world. Tell us about that experience.
Yeah, sure. That's 100% true. So I learned about, bigger pockets. I'm sure a lot of people, followed that podcast, and probably was one of the reasons they got interested in real estate to begin with. And I was that individual back in 2017. I listened to the Bigger Pockets podcast, and they talked about a concept called house hacking. And so I was always kind of fascinated with that concept. And my girlfriend, now fiance, at the time, we were talking about that as a potential opportunity. It was kind of hard to get her on board, but once she finally got on board, we kind of pulled the trigger, and we bought a 4-unit property here in old Louisville. It's a neighborhood here just near the university, just south of downtown. And we lived there for about 1.5 years as I plunged into the commercial real estate brokerage side. And, it really helped in those early years because I didn't really have a mortgage. The mortgage was being paid for by the renters. And again, I had a little bit of investment. When I bought the property, I had to renovate the unit. We ultimately moved in, and one of the other units needed some work. So I definitely put some money into those 2 units. And there were some other, maintenance things that came up here and there. But overall, if you look at the, 18 or 19 months we lived there, I probably out of pocket, a couple $100 a month, which in reality is, nothing when you're talking about having to pay $1,500 or whatever when you're renting something else. So, that was my first experience in the investment space, and I still hold it to this day. So.
Right. Perfect. I see. So not living there, I was going to say, and you had no capital gains, but maybe not. Well, you still got a few years, right? What is it? 2 out of the last 5?
2 out of the last 5. Yeah. And actually you're right. So we lived there from, I bought it in September of 2018, and then we moved out. So yeah, it was 2 years because we moved out in October of 2020. So I've got a couple years left. So if I wanted to sell it in 2023, I have to sell it essentially next year if I don't want the capital gains, but we'll see. If I do sell it, most likely I'll exchange it into a development project or something like that. So.
Right. And you've spent a lot of time, I think, doing some retail and industrial. And I think these are 2 very fascinating topics. On the one hand, you've got retail, which tends to be on the triple net side. And I know that's a huge attractor. A lot of people very interested in that these days. And then industrial, which includes things like warehouses, which are a huge hot commodity. You've got people like Amazon who want to come in and do e-commerce, or maybe even turn it into like a data center or something like that. Let's start with retail.
Are you ready to build passive income through investing in multifamily real estate? Take the next step by heading to www.horizonmultifamily.com and click Get Started to schedule a call.
Let's start with retail.
Yeah, retail. Yeah. So retail is, I mean, and there's different types of retail, which is something we can definitely elaborate a little bit on. A lot of stuff that I've worked on has been like small strip centers, neighborhood shopping centers, et cetera. And there's also single tenant net lease properties, which are, the Walgreens, the Starbuckses, the Dollar Generals. Sometimes they're double net leases versus triple net, but those types of properties are more corporate back leases, that sort of thing. And in my case, a lot of my experience has been on the shopping center side. So small retail strip centers that are along high traffic roadways, good demographics, easy access to those types of properties. And really what the evolution has been over this COVID situation is that there are particular uses that are definitely more resistant than others. So, a lot of the experiential type of uses like a nail salon or, a barber shop or some of these other types of retail uses, again, you can't replicate them through, an online medium. So again, those types of uses are probably going to be somewhat more resistant than, let's say, a neighborhood picture frame store. So again, it's the cool thing about retail, which I really love, is you really have to analyze each of those tenants to get an understanding of what is, their efficacy as a tenant going forward. And then also from an opportunity for retail in particular is that not all retail strip centers, not all the tenants are triple net leases. Sometimes landlords don't know that they can do that, or sometimes that those leases have been in place for a long period of time. But some, like the acquisition we did last year, there was a situation where the landlord, those were gross leases. So like, meaning that the tenants were responsible for paying, the landlord's responsible for paying the taxes, insurance, general maintenance, and they even had to pay the utilities on this strip center. However, a lot of those leases were going to roll off in a year or two. So as an investor, you're looking at that and saying, okay, I can buy it at a lower price point because I'm having to cover all these expenses, but in 2 years, I can start converting those leases over to a triple net opportunity, therefore lowering the expenses, increases the NOI, therefore increases the actual value of that particular investment property. So, there's so many moving parts within a retail investment that, that's why I really like it, because again, it's just like move this lever, then move this lever. And as long as the overall market dynamics are good, like the location's great, it's got good visibility, it's got good accessibility. Now, especially in retail with the drive-through capability, that's huge. I mean, there's a lot of companies out there and businesses that won't even look at a building unless there's the capability for a drive-through. So again, it's a very interesting market. I really enjoy it.
Yeah, fascinating. And you already hit on many of the value add opportunities. So you can bring people in for a longer lease, right? You can take a property that has a gross lease. Actually, back up a second. I'm not sure everybody, to me, like a gross lease, that's like your plain vanilla lease, right?
Yeah. So if you think of an apartment, so even an apartment is not a gross lease. So think of like an office building. So like when you rent space in an office building, typically the landlord pays for everything. So you pay a flat fee each month, and then that covers your water, that covers your electric, that even sometimes covers your janitorial. So people coming into your office and pouring out the trash or whatever else. So that's what typically a gross lease is that the landlord is responsible for covering all the operating expenses for the property. And so typically, if you're going to charge a gross lease, you need to charge a lot higher rate than you would for like a triple net lease, because you have those built-in operating expenses you have to account for. But there's instances in the market where you see these lease rates and they're comparable maybe to the market, but they're gross leases. So now the expenses are, 20 or 30% higher. Therefore, the NOI is suppressed, when in reality, it probably shouldn't be. It's just, the decisions that were made years ago by the landlord that cost them, and that opportunity.
Exactly. And even more importantly, it's not just the NOI, but it's also the predictability. So you got a longer term, obviously that's going to pay. It's just, many people will tell me to think of a triple net as a bond, right? So you've got a longer term bond, ordinary conditions, you're going to be getting a much higher rate.
Exactly. And there are situations too. And again, it's a give and take with the tenants. I mean, you can't pass along everything and expect the tenants. Sometimes the tenants need a little bit of help, but not only that, but there could always be a cap, for example, like a lot of instituting some sort of cap in your leases where it's like, okay, I'll cover a piece of this, but I'm capped up to, let's say, I don't know, a $2 a square foot. Anything above $2 a square foot for operating expenses, you guys as the tenants have to cover. So at least it limits that upside risk, because you're right. I mean, inflation's coming. I think we all understand that. So what's that going to mean for operating expenses? It's already manifesting itself in labor. So you look at the wages that people are having to charge, that's going to manifest itself in higher operating expenses. So having a cap in place when it comes to your leases is probably a wise move for you as a landlord, because it's going to come. It's going to be an increase in operating expenses. So.
Yeah, awesome. And well, what about some other value add? Any other things that a landlord can do if they have a property and they just want to push that NOI?
Yeah, I mean, for retail in particular, drive-throughs. I mean, if you have the capability for drive-throughs, do it. I mean, again, there's just a lot of demand for that, because, and especially in a situation where we find ourselves in COVID, for example, those restaurants who had drive-throughs mitigated some of that risk, whereas those that didn't were forced to, they couldn't do anything. So they were forced to either do delivery or whatever else. And in an environment like that, where you're charging for additional delivery and whatever else, those that have a drive-through probably beat out a lot of the restaurants that didn't, because you factor in delivery fee, you factor in tip and everything else. Like, a lot of consumers were like, well, I'll just go to the restaurant down the street, go to the drive-through and call it a day, So again, drive-through is a big one. Retail, other things you can do. I mean, potential development opportunities. I mean, again, that's why another thing is, like, you analyze the market and see what the demand is for different tenant uses. So if for some reason you find yourself every time that center is up for lease, it's getting filled like quickly, maybe that means that there's a demand for that area that needs to be filled. Therefore, you may be able to develop the building and have the tenants in line come in. So, that could also be another value add opportunity.
Awesome. Yeah, drive-throughs are amazing. I love those when I go to the pharmacy. I don't have to get out of my car if I'm sick. Last thing I want to do, or if you're sick and you want to get tested, drive-throughs are just amazing. Yeah, my favorite trick is the out parcel. If you can build something out there, that's another cool one, because I think if a lot of people come from multifamily and it's obvious what you do, right? Hey, you just renovate the place and you jack up the rent. But if you're in one of these triple nets, it's not as obvious, I think, from the outside. But once you get in there, like you said, all those levers, great analogy.
Oh, for sure. Yeah. And underperforming properties oftentimes, or maybe not even like run down properties, it's just the leases suck, because that's why you got to look at all the leases in retail, because there could be a situation where, let's say that, this tenant has a 2-year lease, and then they have 4 options on the back end, which means that for those listeners who are listening that don't necessarily know what options are, it gives the tenant the right to renew their lease at some predetermined rates in the future. So in a situation where the rents continue to increase, the market rents continue to increase, they may look around at the market and say, oh, wait, like, if I leave this place, I'm gonna have to pay 30, 40, 50% more. I'm just going to renew my lease at this lower rate and hold the landlord hostage for 10 years. And so I've seen I've seen situations for my investors where I analyze the leases for some of these retail properties, and I'm just like, oh my gosh, these tenants have three renewal options for 3 years, so that you're going to time up the property for potentially 9 years. And if the market rates increase and they have the predetermined rate already defined in the lease agreement, then you're kind of SOL. Like, there's nothing you can do.
Yeah, those leases can be very, very technical. I hear people saying, hey, it's a triple net lease, so who pays for this or that? And my favorite answer to that question is, well, read the lease. And it's very, very complicated. I heard of one story between, I want to say it was 2 restaurants, both shut down because of COVID. And one had a clause that said, under no circumstances will the rent be decreased. The other one lacked that clause. And guess which building is worth more today?
Yeah, you're right. I mean, that's why it's so, I think that's why it's a unique opportunity for a lot of people too, because it's kind of weed out some people that aren't going to be doing the legwork to figure that out, because it is a case by case basis. A lot of times with these retail deals is that you have to create those lease abstracts. You got to, break down who's responsible for what the expectations are for the landlord and the tenant, and then extrapolate that out into a pro forma and determine, okay, is this worth pursuing as an opportunity? It's a lot of legwork on the front end, but for those who are interested in potentially pursuing those types of opportunities, I think it's well worth it.
Awesome. Yeah, I love triple net. And then let's talk a little bit about industrial. So tell us about your experiences there, some of the opportunities, and maybe somebody who could be in another phase of commercial real estate. How do you get in?
For sure. Yeah. So on the brokerage end, to be quite frank, I haven't done too much in the industrial space. I have several clients I'm working with right now, and I've actually leased up a 10,000 square foot facility nearby here. It's a warehouse space that is actually going to house a B2B business for convenience stores. So, the bulk product for convenience stores. So if you sell, like the over-the-counter medicines or, whatever chips, whatever you would see in a normal convenience store, my client is the one who has those bulk products that they just sell to these convenience store owners. And so they're going to occupy about 10,000 square feet of space. So we got, they bought, it has like a 30-foot ceiling. So they have those big, I don't know what they're called, but where you store the materials and everything on top. So it's going to be a great little space for them. But as far as industrial is concerned, I think there's a delineation that needs to be made, because when we think industrial, we think these massive warehouses with 30+ foot ceilings, and that's a relatively new concept. Historically, that wasn't necessarily the heavy focus, but now with e-commerce becoming so popular, the reason why they're so popular, especially these large warehouse spaces with high ceilings, is because you can store a ton of material on site. And if they have high ceilings, you can utilize the cubic feet of the space versus just the square footage of the space. So the price to store those materials actually decreases as a result of being able to stack these products on top of each other. But that's the distribution of warehouse. There's other warehouse space that's more manufacturing heavy. Those are the ones that have, high capacity to the building. They have the phase 2, phase 3 power, everything else pertaining to that support that manufacturing component or capability. And they usually have, a good amount of land to be able to store material outside, because if you think about it, if you have, metals that you need to store on site in order to bend or whatever into whatever product you need the outside space to be able to handle that. And those tend to be a little bit more, office heavy, and maybe, the ceilings aren't nearly as high as you would see in a manufacturing or a distribution warehouse. And then there's also stuff that's called flex space, which is, you look at the, these 40 to 50,000 square foot, or maybe even smaller oftentimes, but 20 to 1,000 square foot buildings, you just demise them out into like 2 to 10,000 square foot units. And then you have a small office in the front and then a warehouse in the back. And these are perfect, situations for like small contractors. There's also, I have a client that I'm working with right now that we're getting them into a 2,500 square foot industrial space, and they have an office in the front and the warehouse in the back, and they're a Persian rug and cleaning business, So you start seeing these types of uses coming to these spaces, and that's very hot right now. We get calls on that all the time, where it's like, oh, we need like 3,000 square feet of space, or we need 5,000 square feet of space. And they're not the ones looking for 500,000 or 1 million square feet of space, but they're willing to sign a triple net lease at, 3 to 5 years for these like demisable spaces within a broader center. So those are just some of the, the categories within industrial.
Great. Well, why don't we go back to that triple net world? One of the things that saddens me is you see a lot of people, they just love what they do in business, but they may not be very, sad to say, business focused. Like maybe you just love doing nails or hair, or you love baking pizzas. And so you get in and you sign a lease. And then I hear these horror stories of people who they really have no idea that not only have they signed a lease for maybe 10 years, there could be, in many cases, a personal guarantee attached. So I understand that you've written a book to help people like that.
Yeah. That's definitely something that I personally have seen. And it's really sad to say. I mean, especially for small business owners that start out. And again, this is a dream that they're trying to realize for themselves. And a lot of times it can become a nightmare very quickly if you don't really understand what you're getting into. And so I actually have been working with, small business owners and startups since I started, and, going through the process with several of them, I realized that a lot of them didn't really understand the whole commercial leasing process. And so I wrote a book called Before You Sign That Lease, The Small Business Owner's Guide to Leasing Commercial Space, where we kind of highlight the process of navigating that, often mysterious process of leasing commercial space. And so, we talk a lot about, do you even need a commercial space to begin with? Because I feel like a lot of business owners, they think that getting a commercial space is like a validation of them having made it, when in reality, they may not even need a space to begin with. So really sitting down and thinking first, whether you do need one or not, is the first step. And then we dive into what do you need to be ready to go, be prepared, so that if you find a space you like, you execute quickly. And then we dive into the contract stuff and all the, terms you have to know, whether that's triple net, that's CAM, some of the lease provisions like subleasing clauses, who's responsible for what when it comes to the maintenance of the property, et cetera. So, and the monthly cash outflow piece, which you mentioned, which is, the triple net expenses plus the base rent. So, those are just some of the things we talk about in the book. And, I think it's a very simple to read, quick. I try to keep it as short as possible, 120 pages. So I think it's kind of a little bit of everything you need to know. And then you surround yourself with the rest of the pieces, like your commercial real estate agent, your attorney, your accountant, and, you should be in good shape.
Awesome. And this is actually an enterprise that you're expanding, because I understand you've got several others, like Before You Buy That Building, many things in the works. So tell us about the series and how you're trying to help people really, as I understand, go end to end in the commercial real estate space.
Yeah, no, that's a great question as well. And thank you for kind of mentioning that. I mean, the Before You Buy That Building piece is the next piece of the puzzle, right? Because a lot of people, what happens is when they first start in their business, they want to lease commercial space to kind of get acclimated to what's going on around them. But ultimately, a lot of business owners like the idea of potentially owning their own space so they can capitalize on the appreciation and all the benefits that are associated with owning commercial real estate. And so my next book, which I just finished and it's going to be releasing next month, is Before You Buy That Building, which is the comprehensive guide for business owners in particular that want to buy their own commercial property. The next book in the series, which I plan to release this year, maybe later this year, is going to be Before You Sell That Building. So you're a business owner, you've gotten to a point where you want to either sell it to buy another building, or maybe you're getting close to retirement and you're trying to weigh your options as far as what's best for your business. That's a book for you. It's going to be a book. And then once we start getting more on the development side, which I know we talked about briefly when we were speaking prior to hopping on, was my business partner and I started a development company called Fidelity Development. And as we start getting more down the line of that, and getting more development projects under our belt, I'm going to write a book called Before You Develop That Building, which is going to be a comprehensive guide to developing commercial property. And we're trying to keep it as simple as possible so people can understand. And then finally, the last one I think we're going to write is going to be Before You Invest in That Building. And that's more for passive investors. So if you see opportunities out there, what do you need to look for? Because again, the principal is the number one piece, because there's great opportunities out there that may have phenomenal returns, but if you're not in line with what the principal is doing, then obviously that's ultimately not going to work for you. So it's one of those things where I think that it's going to be a very good guide for people. And that's probably going to be next year or the following year.
I love it. It's great to have a series, because once you get into someplace that's really complex and maybe a little frightening, like commercial real estate, it's great that if people like that first book from you, that they can really follow through and understand the business from end to end. Really exciting. Great work.
Thanks, man. I appreciate it.
And to promote a book like that, I know one of the things that's valuable is to have an amazing social network. Have you got any social networking tips or tricks for us?
Yeah, I mean, there's plenty, and luckily, I mean, I really pushed hard right when COVID hit, as we mentioned. I mean, I was working with people, and all of a sudden, it kind of fell apart. No one wanted to do anything, and you're just kind of freaking out, trying to see what's going to happen. What are you going to do? And so I really focused heavy on the digital marketing piece, and so I got really involved in virtual meetups. So I created a commercial real estate 101 meetup group. Which is a virtual LinkedIn meetup group that we meet bi-monthly. And so I invite speakers from all across the country to talk about different commercial real estate topics, and we just interview them. And our most recent one, which was on blockchain and commercial real estate, we had Chip Ridge, who's a local business owner who owns a title company called Millennial Title. He explained the future of blockchain and how it's going to affect commercial real estate. We had almost 400. I think we had 480 people on the call from all across the world. We had people from Scotland, England, Brazil, all across the United States. And so it was really cool to see the growth that has occurred as a result of just being consistent with that approach. And then, as far as other stuff, I do a lot of YouTube. So I have a frequently asked question series that we do every Monday. Just answer questions pertaining to commercial real estate. And then, I also have a podcast, which is the Commercial Real Estate Academy podcast. And we release an episode every single week interviewing similar to you. And you've done a phenomenal job with your podcast as well. I've watched several of your episodes, and you're always adding a ton of value to people. So, again, it's just being consistent. And there's this book called The Compound Effect that kind of changed my life when it came to that, is that the small, consistent, positive action every day adds up to huge results pretty quickly. So it's one of those things where, if you may not see the results right away, just be consistent, be patient, and do the things you need to do every day, and it'll manifest itself pretty quickly.
That's just amazing. Maybe that would be a great way to segue into the books that have forged you as an entrepreneur and as a leader. Any others that you'd like to add other than The Compound Effect?
Yeah, there's so many. Man's Search for Meaning by Victor Frankl is probably one that really, changed my perspective about how do you approach negative stimuli in your life. Because just to give you guys a backdrop, for these guys who are listening, Victor Frankl was a gentleman who he went through, probably one of the worst situations you could possibly go through. He was a prisoner in the concentration camp, survived it luckily, but he saw death all around him, just pain and suffering, but he was able to reframe that in his mind and came out of it stronger than ever. And, it puts life into perspective. It's like, if other people are able to suffer through these terrible situations, which, I could get upset about, being late for a meeting or getting someone upset at me, but does it pale? It pales into comparison to what other people have had to suffer through in life. And so when you put your hat on and say, okay, is this situation really warrant my, stress or worry or, frustration? And if you could change that and say, I'm the one who chooses how I react to every negative stimuli that comes across, that is game changer, because now you're not going to be disheartened. You're going to say, okay, this is just an obstacle in my way of getting to where I want to go. And so that book was, changed my perspective on that front. And there's so many books. I read a lot of books, and especially Audible. I'm a big Audible person. I love the capabilities of being able to travel and work out while I'm listening to books. So I'm always reading books, in particular biographies and business books, personal development books, relationship books. So.
Yeah, that's an awesome list. And I love that you've got some deep things there. Very, very deep. The things we call problems are not real problems. I've heard people say that what you really need to do is go and find bigger problems in your life, right? And that's because that's how our mind works, right? Whatever situation you happen to be in, whether it be good or bad in objective terms, your mind will find something to call a problem.
Exactly.
And,
yeah. And people have this idea. It's like, well, I'll be happy one day if and it's like, life is short. Like really enjoy the moment. Understand that we're here for a reason. We're here for a purpose. I truly believe it. I think we're really here for a purpose, and that purpose is to serve others. So if you live in line with your purpose on a day-to-day basis, then, I think that's the best you can do in this life.
Yeah. And I like to turn that around. I've actually got an example or an actual exercise that I do when I walk around my house. I remember when I got my chandelier and how really for a couple of weeks that did bring me happiness. And maybe 2 weeks and a day, I was reminding myself, yes, this is really wonderful, isn't it? And I do that as an exercise because I want to remember just how transient it is when you buy something that you like. It does bring some immediate joy to you. And these things that to be a little trite, that are not really the big thing in your life, right? It's not long before they mean like almost nothing. And it's just the place you live. And it doesn't matter how good or bad it is. Pretty soon it becomes just the place you live. And I remember also, there's another one. I walked by my house. I bought this small statue for about $300. And it's actually ground up marble.
Nice.
It's, oh my gosh, Carrara marble, right? So this is like what Michelangelo used to carve David. And I'll tell you two things. First of all, there was a little disappointment because I realized without the marbling, it doesn't look the same. There's a reason it costs like $319, but it actually looks like the Venus on the half shell. And I remember there was a decent amount of time I would look at that and I would say like, yes, this is it. My house is complete and I'm so happy. But every time I look at it now, I just laugh. It's nice. It's nice. But as far as getting long lasting happiness out of something other than contributing to other people, it just doesn't happen.
No, 100%. And I think that's a great realization, because a lot of people don't think that way. They think, oh, I'll be happy when I get the big house, or I'll be happy when I, have 10,000 units, or I'll be happy when I do this. But then they once they get there, they realize, oh, wait, it's okay. I normalized everything now. And it's like, oh, wait, I just wasted 20 years or however many years of my life not focusing on what was most important. And that's giving back to others, your family. In my opinion, that's one of the most important things, is your family. So really spending time and making sure that you foster those relationships, and in particular with your close family and friends. So again, don't lose sight of what's most important, I guess, is the theme here.
Amazing, Raphael. I don't feel like I could take that any further. So maybe we'll just end it on the philosophical plane. And just, I want to thank you for an amazing interview. Thanks for sharing all of your amazing insights as a broker, as an investor, and with literally so many different phases of commercial real estate. Thank you for coming on the show.
Definitely, man. It's truly an honor to be here. And I look forward to supporting you in any way I can. And looking forward to keeping in touch.